Welcome back. Let's get into that market movement now. Asian markets closed largely slipping as geopolitical tensions remained high following drone attacks on Saudi oil installations over the weekend. Now, oil prices came off from the highs that were registered yesterday, but still hover a couple of dollars below $70 a barrel. Japan's Nikkei share average inched up to a 4.5-month high, closing high on Tuesday as soaring oil prices triggered by attacks on Saudi crude facilities boosted oil and gas-related companies. The benchmark Nikkei average there closing just above that 22,000 point mark. While Hong Kong's market was on the back foot, concerns remain as violence continues in the region, even after the full withdrawal of the extradition to the China bill. The Hang Seng declining by 1.2%, sitting at 26,790 for the Hang Seng, with the Shanghai Composite then, mainland China, having a bad day. That was down 1.7%. Let's head on over to the United States very quickly. Over in last night, energy stocks spiked while Wall Street's three major indices lost ground after weekend attacks on Saudi Arabia's oil facilities began to add to investors' concerns about geopolitical risks and, of course, a slowing global economy. Now, the Dow Jones Industrial Average fell 0.5%. That was at 27,076 points. The S&P 500 lost 1/3% as well, just below that 3,000 point mark. And the Nasdaq Composite dropped around 2/3% there, also sitting at 8,153 points. Let's move our attention to the European market very quickly as well, which has, of course, been suffered and hit rather hard considering the state of that oil rig as well out in Saudi Arabia. How things fare over there will certainly be key to the impact on this market as well as the local market. So only the DAX in Germany is sitting down, so some positivity returning perhaps to the market, with London and France both seeing some positive movement. On the local index, though, well, we're down around 1.3% this afternoon. It certainly has been a stranglehold following the positivity of late, but not to be today. Suffering quite heavily as the industrials also are pegged lower. Financials, the banking sector, not doing as well as one would have certainly hoped. On to the commodity stocks. Well, they seem to have done better off considering that yesterday was a bad day for them. Seems like a slight retreat today has brought back some sense of positivity into these as those prices, of course, continue to head a little bit higher on. The resource counter sitting at 44,655 points. The commodities themselves have certainly been of keen interest. That oil price will be, of course, the most important here, sitting just below that $68 a barrel mark, seeing it spike as much as 19% on the futures roll and 15% across the day. We're certainly seeing that bound to impact South Africa's petrol price, and that is bound to hurt as we head off, of course, into that interest rates decision by the South African Reserve Bank, because that fuel price will certainly impact just how they see inflation over the next few months. Over onto your currencies, slight weakness for South Africa, having sat around 14.60 odd against the US dollar. We're getting that weakness filtering through. Risk-off trading seems to be the sentiment right now, so perhaps investors not keen to get into the risky stuff for now. And of course, there's a local currency then suffering at the hands of that. Let's head on over now live to the Johannesburg Stock Exchange, of course, where my guest Sean Morrison from IG South Africa joins us as we unpack this market movement. Sean, thank you so much for the time. Appreciate it. 1.33% downfall there for the JSE All Share. Perhaps expected considering the world and the geopolitical tensions right now?
Yeah, it's not a great day. It's basically eroding all the gains we saw yesterday. Yesterday was quite a nice day on the market. Geopolitical risks are a concern. I think there was also some expectation that the People's Bank of China might lower the one-year lending rate, because we saw, Asian market leading that decline. But, when you look at the rand and that as a proxy, rand weaker, it is a proxy for sort of market risk, so to speak. And then if you look at our market, who's leading the declines, we've got the financial shares. It's broad-based selling, which is an indication of fear, but it's led by financial counters, which is, also showing that effect of that rand.
Not very often.
Artificially boosted, I think, yesterday when we saw some... Sorry, Arabile?
I was just saying that it's not very often that you still have any story sort of taking over from the Chinese-US trade talks, and yet we have the oil saga, which has taken that over completely. Nearly $68 a barrel. That could hurt.
Yeah, I think things were running a little bit too smoothly for too long. So now we've got this, the Saudi Arabia issue, the drone attacks. We've taken out major oil facilities. I think it's about 6% of supply. Interestingly enough, a lot of that supply has already come back online as of yesterday. But I think the sentiment that extends from that, what is the next action? Who did it? We heard Trump on your news bite early on talking about, they're ready with, bigger weapons, to retaliate once they have the details of what's going on. So, any problems within the Middle East, it's not really good for any of us. Higher oil prices feeds into our inflation.
And that certainly does mean that
that's why we're really sitting and waiting for some outcomes.
Yeah, sorry about that, Sean. We do have a delay, of course, in the broadcast, but it does, however, impact the South African Reserve Bank, which kicks off their meeting today on interest rates. If we had any hope that they would cut interest rates, this certainly puts a dampener on that, doesn't it?
Yeah, I think so. We're in the camp that we're going to get no interest rate cut here. Although when you look at the inflation, it has been low. So I think the last print was 4%. We've got the new print coming out now. Obviously, the move in oil it won't translate in this current inflation figure. But I think the central bank's more likely to err on the side of caution, keep rates unchanged. In light of that geopolitical risk, in light of the trade war tensions, and really subject to the volatility of both the rand and the oil price going forward. I do think there is some possibility that we could see a bit more of a hint towards maybe a rate cut if things do improve later on in the year. Though maybe a 25 basis points still could be on the cards for the year.
Well, I can tell you right now, I'm holding thumbs. That's one thing for certain. Let's quickly chat about that China-US trade war. Deputy-level talks are happening very soon as well. Those kick off on Thursday. And then in October, we'll hopefully get minister-level talks going on. Do we see, perhaps, Trump's focus shifting to Iran and moving away from China somewhat, so hopefully we get some sort of resolution? Or is that too hopeful? If past is any indication on the future, I think it might be a bit hopeful.
We haven't had very much progression in the trade talks. There's a definite cycle. They broke down in May. The Chinese delegates have arrived in the US now. It's a precursor to the actual, face-to-face meetings and negotiations which take place early October. But the general cycle is this: we have markets, or the US and China agreeing to have talks regarding trade. Markets react positively, and we've had that. We've had quite a positive run in global equity markets over the last month or so. And then somewhere down the line it gets disrupted. We get one or two tweets, and then that talks break down, and then risk on sentiment, becomes sort of at front and center. So I'm not optimistic that we're going to get resolution on that, but we are looking for any type of progress. But past predicting future, there's probably going to be a disruption again.
Yeah, it's unfortunate that certainly seems to be the case, and it's all disrupted by just a mere tweet, right? Less than 300 characters there on that one. Very quickly, the currency, 14.75. Still a sense of resilience despite the weakness, surely?
Yeah, I don't think it's done too badly this week. It's I think I think there's a new range that's been set for the dollar rand. I think 14.50 to about 15.50. That R1 range seems to be where we're trading in between at this point in time. We do think the rand is slightly undervalued at current levels, but we'll have to wait and see. I think. We are looking below 15 rand to the dollar. We're positive. Above 15 rand to the dollar, we're bearish on the currency.
All right. Well, Sean, appreciate the time, but thank you so much for that. That's Sean Morrison joining us in from IG South Africa. That is live from the Johannesburg Stock Exchange, of course, in our studio there as we unpack that market movement. It has been quite interesting. Of course, a whole host of issues have certainly come to the fore. How has it felt for the likes of Sasol? Well, they've certainly seen a spike in their share price, that going up to a 6-month high as well then for Sasol, as that oil price, of course, spiked yesterday as much as 19% at some stage as well, then going up to a 4-month high as well for the oil price on on its own. So that has meant that the energy stocks have certainly been doing well across the globe as well, including locally, of course, the likes of Sasol doing better there. Yeah, we do have inflation data expected out tomorrow, and that oil price will certainly play some part, and we'll hear from the governor, Lesetja Kganyago, as well on what his sentiments are on Thursday. We'll, of course, have that live for you here on SABC News. We head to a short break right now, but after the break, of course, chat to the airport company South Africa's interim CEO about how they did in the last financial year. Do stay tuned. This is On Point.